I think they're ready to.
We're still waiting for a quorum, aren't we? We have 4. Very good. All right. Good afternoon. This is the time and place for the Grand Forks Growth Committee, Growth Fund Committee meeting. Thanks for your patience. We were having just some minor technical difficulties, but we'll begin with roll call, please.
Crary, Doppler, Holt,
Here.
Fahmy, Weber,
Here.
Whitney, here, Wolf.
Here.
We have a
And-
quorum.
Very good. We have a quorum. And so we'll begin with Ms. Richards, safety spec security request accelerate loan.
We have some minutes first, Mr. Chair.
Oh, yes, thank you. So I'd be looking for discussion or just a motion to approve the minutes from April 25th, from May 9th, July 26th, and August 23rd of 2021. So April 25th and May 9th of 2022, and July 26th and August 23rd of 2021.
Mr. Chair, can we take them in one motion?
Please.
I would move approval as presented.
We have a motion to approve all 4.
I'll second that.
And a second from Ms. Whitney. Any further questions or comments? Hearing none, all in favor signify by saying aye.
Aye.
Opposed, same sign, motion passes. Now we'll move to item number 3. Ms. Richards.
Thank you. The matter before us today is requested from Safety Spec to change the security. The standard, I hesitate to use the term standard because we've done so few of these, but per our program description, we asked for a blanket UCC lien. Safety Spec has asked for something different, and so that's what we're here to discuss. Excuse me?
Can they hear?
Mr. Carroll, did you have a question?
No.
No. Sorry, I'm not sure what happened there. Very good.
Okay. In any case, we have Dan Goss said, as he said at the previous meeting, kind of walk through these documents, and then we can hear from the folks at Safety Spec to make their case for why the patent rather than a blanket UCC lien is appropriate. So with that, I turn it over to Dan.
Very good. Mr. Gostad, we're good to continue in open session for
Yes,
the time being?
we're talking about documents that are, I'm just going to explain the terms of the documents. First, we've got the, all right, what we've got is, to begin with, is a convertible promissory note, and I'm just going to go through just very top side, because it's a fairly detailed note. As proposed, it's the JDA can make a demand for payment after the maturity date, which is proposed to be May 9th of 2025. So up until that point, it continues to accrue interest at the rate of 6%. Per annum, and then after that date, you can make a demand for payment of all amount, the principal amount and the interest. There are 3 really events, conversion type events. One described as an equity financing. We've heard those terms before. That's essentially when a Safety Spec would seek to raise capital through some sort of equity offering. At that point, and this would be before the demand date, the May 9th, 2025 date. At that point, we would take a look and determine what is outstanding, all amounts. It talks about the outstanding balance divided by the equity financing conversion price if we decided to convert to equity shares of stock in Safety Spec. The outstanding balance is defined within the document itself, which is basically everything that's owed under the loan documents, whether it's promissory note, security agreement, essentially the principal and the interest. The equity financing conversion price is 2 components. Whichever results in the greatest number of shares of stock being issued to the JDA. It's either going to be the valuation cap price or what's called the equity financing discount price. And I'll talk about the valuation cap price. We have to insert the valuation cap and you divide that by the number of, basically the number of shares that are outstanding for safety spec at the time. There are some exceptions. The definition of company capitalization sets forth essentially that it's the number of shares outstanding. Section 8.5 of the convertible promissory note defines what company capitalization is, and we also ask them to insert the number of outstanding equity securities that exist as of the date of the note, so we have an idea where they're at the time the note is entered into. So we either use that valuation cap, which is, again, the valuation cap divided by the company capitalization, and come up with a per share price. Or we use what's called the equity financing discount price, which is, again, defined in the note. It's at section 8.11 of the promissory note. And what that means is it's the equity, the price per share in the equity financing that's occurring times 80%. And so if it's $2 per share, you take that times 80% and you'd come up with $1.60 per share. And so you take your outstanding balance, let's say it's 250,000, and you divide it by 1.6, and that's the number of shares you'd get in an equity financing type of transaction. The next event is a conversion after May 9th, after the demand date, where you haven't necessarily demanded the full payment. You still have the promissory note sitting out there. You can still convert into equity shares of stock in safety spec. Again, it's the same process. We look at, instead of the equity financing price, we look at what's called the demand conversion price. That's defined in section 8.6 of the promissory note. The demand conversion price, again, uses that valuation cap price. Again, the valuation cap divided by the outstanding shares, or the demand discount price. And here it's a little different. The demand discount price, what we do is we take 80% times either the price per share in an equity financing that has occurred within the last 12 months, or if there hasn't been an equity financing within that 12 months, then we have to go out and get an appraisal of those shares of stock. And we multiply that figure by 80%. So again, if we had an equity financing at $2 a share in the last 12 months, it would be $1.60 divide that into the outstanding balance. Or if we didn't have one within the last 12 months, then we'd get an appraisal, and whatever the appraisal is on a per share valuation, multiply that times 80% and divide that into the outstanding balance. So that's the event if we haven't made a demand for payment yet, right? And we still got the note sitting out there. Doesn't mean that you couldn't just demand payment even after the May date, but if you're sitting there with the note, you haven't made the demand yet, their conversion is still in place. So the note could last longer than May 9th of 2025. Okay? The last event is what's called a liquidity event, and that's if there's a change of control or there's an initial public offering. Here you've got two options. One is you can demand payment under those set of circumstances, which is 150% of the outstanding balance. That's called the liquidity payment amount, which is defined in section 8.21. Or you could convert the shares convert the note into shares, equity shares. And again, it's kind of the same process. We look at the valuation cap price, again, valuation divided by the outstanding shares of stock that they have, or the liquidity event discount price, which is similar. We look to see if there's been an equity financing within the last 12 months. If there has been, then that's the price per share we'd use, times 80%. If not, we'd get an appraisal. And so that is, in a nutshell, what the promissory note does. It's different than that safe agreement we talked about. There is no intervening event. We either convert to shares of stock or we don't.
And the liquidity event, that happens, if that were to happen, it's independent of the demand date. It could happen.
Correct.
Okay.
And so if it happens pre-demand date, the May 9th date, and there's a liquidity event, we could get cashed out at 150%. The loan agreement, I'm not going to go through each and every, it's a 24-page loan agreement. It really is what I envision is kind of the master agreement between the JDA and Safety Spec. There are certain representations they need to make and certain things they need to perform under the terms of the loan agreement. A couple of changes that you'll notice is that we had one provision that I believe 50% of their employees have to be located in, or excuse me, 75% of their employees have to be located in Grand Forks. That's one of the conditions that they have to perform. They wanted to change that to 50% and because they're having difficulty trying to retain folks here in Grand Forks. And then there was one provision, section 3.18, about subsidiaries that they didn't, they made a representation they don't have any subsidiaries, and then they noted that they do. It's Wound Exam Corporation. Again, I don't really have any, I think that was good that they advised it, but again, the loan agreement provides there are certain affirmative covenants they have to follow, there are certain negative covenants they have to follow, and there are representations and warranties that they make under the loan agreement. And so if there's a default under the loan agreement, there's a default under everything. And then the last is the security agreement. This is a pretty standard security agreement that I've drafted for other lending transactions. And you'll notice it's fairly red in what's the secured property. That's where the issue is with Safety Spec. I prepared it pursuant to the terms of the program, which is a blanket type of security interest. We take security interest in all assets, which I believe what I drafted takes care of that. One of the things that I wanted to point out is in item D, it talks about licenses and permits. It already includes patents. And my research indicates, unlike a copyright, I don't think we have to do anything. We don't have to file anything with the Federal Patent Office. You do with a copyright, but not with a patent. I think we've got a perfected security interest if we file the UCC. We have to follow state law to perfect the security interest in patents. A little quirk in the law, a little nugget in case somebody you ever get in a cocktail party and you want to talk about security interest in perfecting a patent, now you know. And as I understand, and I'm sure Safety Spec will correct me if I'm erroneous in this, is that they're concerned about the security interest in the secured loan because of the conversion rates. Essentially, if you get conversion rates, then the security interest should be lessened, or there shouldn't be any security interest. And also, the concern is that if in context of the amount of the loan being $250,000, that the extent of taking a security interest in everything might be more than what is justified in comparison to, let's say, a $10 million loan versus a $250,000 loan. That's why I understand their concerns are with respect to the security interest. As far as the changes that they've proposed on the note or the loan agreement, I didn't have any real concerns about it. There's just a couple of pragmatic changes that need to be made to the promissory note itself. Because I drafted this several months ago, and the maturity date was going to be April 5th of 2023. Now it's moved out to May 9th of 2025. So if you take a look at, for example, sections 4.1 and 4.2, we just need to make reference to May 9th of 2025, not April of 2023 when these were originally drafted. But those are more pragmatic changes than anything else. They're not substantive that I've seen. So with that, I can certainly answer any questions that you may have with respect to the documents.
Mr. Chair, I just want it noted too that there is, with Safety Spec, potential conflict to make known to the committee. They are a physical tenant at the Center for Innovation. So just want to make that known, and if there's any questions or concerns around me voting or recusing myself, given that.
So the way we've moved forward on that in the past, under Mr. Gaustad's advice, is to have a motion to not recuse, to recognize that the conflict has been expressed, but then to express confidence in the committee members' ability to rise above that conflict, and then we vote on where we're at on that motion. So having announced that conflict, do we have a motion?
I would,
And I can assist, it would be a motion to allow Ms. Whitney to vote on the matter.
yeah, and that would be my motion. I would move that Ms. Whitney is allowed to vote.
Very good, that's the motion, and do we have a second?
Second.
Second. With that motion on the floor, is there any further questions or comments about that? Then we'd be looking for a vote on that motion. All in favor signify by saying aye.
Aye.
Opposed, same sign. So motion passes. So thanks for announcing the conflict, and the committee's expressing our confidence in your ability to rise above it.
Mr. Chair.
Please,
I
Mr.
also
Kerr.
want to identify conflict of interest with Safety
Okay.
Spec. Can be involved in the Accelerate conversation, but I would request to be recused from any voting.
Okay, it's a small community, wear many hats, looking for a motion to,
Is the conflict because you've got involvement with Safety Spec?
Yes.
Oh, that you're, okay.
For sure, I'm not voting. I'll be recused.
So it'd be the same process, this one might fail.
Gotcha.
very good.
So I would move to allow Mr. Perry to vote on safety spec decisions.
Very good. We have a motion to allow.
Second.
We have a second. Any further questions or comments? All in favor signify by saying aye. Opposed, same sign.
Aye.
So Mr. Curry is recused from voting. Just another kind of housekeeping matter. Short of that, are any of the committee members, can we abstain from votes?
If you abstain from vote, you're deemed to have voted in the majority.
Very good. Thanks. With that business out of the way, unless it is a small community, we're good to move forward. So, Mr. Gaustad, you first described our three options for conversion events, and that was just clarification. That's what exists in the current agreement. And then you brought forward three requests to modify the agreement, if I'm understanding correctly. The first was to modify the requirement that 75% of the employees be in Grand Forks. The request is to shift that to 50%. The second request was that there had been a statement that there were no subsidiaries. Now we're being asked to recognize that there is a subsidiary. And the third was a request to alter the security agreement in terms of dropping our security position if we convert, and also some housekeeping issues around some dates. Is that a good summary?
It is. I would view the subsidiary as being non-substantive. It's a representation warranty that they're making that they didn't have any subsidiaries, and they wanted to make sure that that was clear, that they have at least one. So I'm not sure that's necessarily substantive, more than alerting the JDA of that. The employee percentage, suppose that would be that is a substantive change, but the most significant that I see is taking a security interest in their patent and their patent only, as opposed to what the program requires is a blanket, because that is, they're asking for a change from the program parameters for this type of loan. That's the most significant substantive change. And when I say significant, I mean it alters the program parameters is what they're asking for.
Very good. Questions or comments on those three requests? And I think I'd prefer to take those three requests individually, if that's all right, Mr. Gaustad?
But what I heard is the second request, there's no action necessary on the subsidiaries portion, right? It's just.
I don't really think it's just a disclosure more than anything.
Okay.
Yeah.
Okay. Very good. Mr. Wolf, please.
Yes, Mr. Chair, so just so I'm clear, and we're being asked to do this here now, when we're talking about removing the collateral of the UCC and going to the patent, which it sounds like we would already have a security interest in the patent at this point? Is that fair?
By executing the security agreement, yes, and then we'd go through the perfection process.
Okay, so, but we would be removing, so we would not have a general UCC is what's being proposed now or at conversion?
Now,
Now, okay,
because
thank
if
you.
you convert, you're no longer a debtor.
That's what I was just trying to make sure, because I heard something differently.
Yep.
Thank you.
So we're being asked to give a little on a couple key points here.
Yes.
And because the first one is to recognize the challenge they've had in hiring employees in this area. And the second one, the reasoning behind the second one?
As I understand it, is what is explained to me. We had a meeting last week with safety spec representatives, and there are issues with respect to the blanket security agreement, or the security agreement in itself, is that you've got conversion rights, so you generally don't see a secured loan. I can't answer that. I guess I like security interests on loans. And the second is that, is that the amount of the loan here doesn't necessarily warrant the level of security interest in all the assets that they have. At a $250,000 loan, as opposed to a $10 million loan, now the risk level goes up as you borrow more money, right? And they're suggesting that we don't need all the collateral, for example. And as I understand it too, the value of the patent would be much greater than the outstanding loan. Again, I can't answer that, but I'm assuming that to be the case.
Unless there's pressing questions, perhaps we could let Mr. Barton, Mr. Barton, comments?
Actually, what I'd like to do is, Thomas Burke, our CFO, has had a lot of experience in investment banking from his Lehman Brothers experience. I'd like to actually have him address the question, if that's okay.
Very good, absolutely, thank you. Mr. Burke, please.
Thank you, and firstly, I'd like to thank you for giving us the opportunity to meet with you today and to present and to discuss this issue. So Mr. Gaustad has given a very good description of what the issues are and a good summary of the outlined position, and I'll just reiterate what he said and add a little detail to a couple of the points. So we really have two areas where we have difficulty or where we want to discuss our alternative security proposal. And the first one is an economics issue, as he correctly outlined, and there's a couple of aspects of that. And then the second one is a difficulty for us as a company to take any financing with a blanket security agreement in any quantum at this stage, in the context of our further capital raising and the impact that would have on future investors and the view of our existing investors as to the appropriateness of giving that type of a security package. So first I'll hit the first point, which is the economics and what we think is appropriate. So we recently closed out a capital raising where we valued the company and raised private capital at a pre-money valuation of $20 million. So that means that investors invested in the company, valuing the company before they put their money in at $20 million. And we raised a meaningful level of capital there. And so that kind of sets the framework of what's the value of the company. Ken, did you want to make a comment?
No, go ahead.
Okay. And then the second component of the economics is, as Mr. Gaustad mentioned, the value of the patent that we have in the context of a $250,000 loan. We think that the value of the patent provides good and adequate security for a loan of that size. And what we wanted to put into context as well is that other investors in the company who invest in the convertible debt don't get any security over assets, so to speak, okay? in terms of a direct, specific lien on any specific assets. And so in this case, it's really because we would like the city of Grand Forks and the program to be an investor in the company, because we want to be an important part of the community. We want to increase our links to the city. Of course, we want additional investment. But it's important for us to point out that the city would be investing really after this last round has been raised, and we are soon to launch another round, where our expectation and our plan at the board level is to launch that next round at a $40 million pre-money valuation. The valuation cap, because we made these arrangements with you in the context of the prior offering in the fall, is that the valuation cap that Mr. Gausted mentioned would be the 20 million pre-money valuation cap. So, subject to us raising the next round, which we feel confident we will, there's obviously always risk associated with technology companies. But if we raise our next round, and we're planning on launching that round towards the middle to the end of June, then simply by closing out that round or a component of it, the valuation of Safety Spec would go from 20 million to 40 million, and the city would have the right to convert at that round. So theoretically, 100% return on just the day of closing. So that's a context I'd like to give to you, which is a benefit really to what the current investors had, because you're investing later with more visibility on different things, with a level of security over the patent, but also a significant advantage versus our soon-to-be new investors, okay? So you really have the city would have a meaningfully better risk-reward profile than either the old investors who just invested or our new investors who are going to be joining us shortly. So those are all of the different aspects of the economics that I wanted to highlight. The second component is that it would be difficult for us to give a blanket security interest to the city. So and when I say difficult, what I mean is we wouldn't be able to do that. So it's really more of a binary thing, and we understand, very clearly, and Mr. Gausset has articulated very well, that this program is a program that's structured in a certain way, and how it's structured is to take a blanket security interest over all the borrowers. So we understand that, and that would be a provision that we would not be able to proceed with for some of the reasons he referenced, which would be the size of the loan, but also it would make it difficult for us to explain the existence of that type of security interest and the appropriateness of it to both our prospective new investors and our recent and existing investors. It wouldn't make sense to them, so we wouldn't be able to do it. So we would love to have the city as an investor. We think it would be a good deal. We really would like you to do that, but we would be unable to do it on the basis of a blanket security interest. Is there anything you'd like to add to that, Ken?
Yeah, let's talk just quickly about the 75 to 50% hiring ratio. We have been hiring, actually, we've been expanding our office, and Joe, you can attest to this. Joe Lassick, we've been expanding our office in Grand Forks. We actually hired a gentleman from Atlanta who's moving to Grand Forks, and actually UND already hired him away from us after we trained him, which wasn't so fun. The nature of our technology is very I guess specific. I'm not sure the word I'm looking for. Where we're looking to potentially open up an office also in Fargo to be able to attract some people potentially from Minnesota that wouldn't go to Grand Forks but may go to Fargo. Because we are committed to NB in general. Excuse me, my nose is dripping. But we're thinking that as we're growing and we have to grow, I don't want to have an issue triggered because we're hiring more people in a different location, particularly in Fargo.
Let me ask this, when it was 75%, what was your anticipated or projected FTE at that time?
Actually, Tom, you might be able to answer that as well.
I think we were anticipating that we would grow to 20 to no more than 25 employees over an 18 to 24 month period of time. And I think we're actually tracking most likely to exceed that, but we're hoping that for all of our headcount in all areas, including potentially Fargo or elsewhere, that we would go, above that at some point. But I think we're tracking to be a material employer. And what I would say, all of our employees are high trained, high technology, graduate degree folks. So we have people.
And Joe, you can describe that you just opened up the second office, right, at the Innovation Center?
That's right. We just doubled it in size, and we moved our entire engineering team from our first office, where we're bursting at the seams. So now we've got some elbow room, and we've picked up a couple interns, and so it's busy. It's busy. There's 10 people in and out all throughout the week, and we're continuing to grow there. But like Ken mentioned, it's not just here that we're growing.
Very good. Thanks for that explanation and description. Any questions or comments from committee members? Yes, Mr. Wolf, please.
So, thank you, Ken and Thomas, for the explanation and I think summarization of what Mr. Gaustad indicated. If I'm understanding, just to summarize it here, would be you're asking to remove the UCC general filing just because other potential investors don't get it or would not receive it. And so my question would be it wasn't in the packet, but the additional, is there a UCC, is there a bank, is there a reason, is there some other financing event where someone else is requesting this UCC be removed, or is this just a general investor?
No.
We're actually the only group that we've even considered having any kind of a UCC loan.
Okay, so this is not a request for, there's something else going on where a bank is requesting that they be in first position. This is just a general, because we are considering some type of equity conversion that others would not get, you're asking us to remove it.
Yeah, that's correct. But I think I would add to that is that we wouldn't enter into a $250,000 secured loan with a typical lender. So at the right point in time, we'll enter into inventory financing, receivables financing, $2.5 million, $5 million, $7 million type of loan. At which point we would give a blanket security interest.
Potentially, Tom.
Potentially. It could also potentially just be over the inventory and the receivables, for example.
So, and then it sounds like you are hiring people in Grand Forks. We do have people, Joe, I think I heard you say there's maybe 10, but we're just, may not get to the point. So we are hiring people in Grand Forks, but it's been slower than what you would anticipate, and that's why you're asking for reduction.
We're just trying to we want to make sure that that we basically comply on whatever we agree to.
Sure.
But by the way, for Tosh and I, my CTO and I, we bought a house in Grand Forks on Reeves Avenue, so we might be considered Grand Forks people soon.
Sure. Well, then maybe we should keep the 75%. We'll have you here again. Is there, and this is a question then for Mr. Gaustad or the city, are any other, all other matters we've discussed, are we in compliance of?
Yeah, I think the one thing that I probably should have pointed out, and I failed to do so, the only issue is the security, the level of security, right? Because of the program specifications, as I understand them, require a blanket. But there is an out, even at 75% for a number of employees. If you take a look at section 3.15 of the loan agreement, it talks about that that percentage, whether it's 75 or 50%, is subject to reduction upon the borrower certifying to the lender that despite its good faith and best efforts, borrower was unable to employ a sufficient number of qualified persons to meet this threshold. So there is still an out, even at 75% threshold. So again, those are, I don't recall, I don't know if that threshold was necessarily a specific program requirement, but I know that there was discussions at the prior JDA in a prior Accelerate loan where a member of the JDA raised the issue about the number of employees, having a sufficient number of employees within Grand Forks. So that provision was added to address that concern.
Yeah, Ms. Whitney, please.
So maybe it's more of a process question. I'm going to channel you, Mr. Holt, here. By making a change when we say we aren't necessarily going to make the shift on the UCC and it's not just going to be blanket, that we'll start negotiating what that looks like. Do we envision that in future loans, like we'll enter into this negotiation process of what, and I'm not saying Safety Spec's valuation of their patent isn't accurate. I guess I'm trying to look forward even to say, how do we then start valuing what someone may bring to us as a security on this type of agreement? Trying to think process here in the future, not just in this particular instance.
I think you'd start, I go back to, I think I said this a long time ago, you start looking like a bank and you start doing what a bank does and evaluating what the value of the assets are and what the amount of the loan is and making an assessment that value has to be X and the loan has to be X minus. Whatever that percentage, whatever this committee might decide, or, we're not taking a security interest, or maybe there's, and all of those are risks. Analysis that you're going to have to go through to make yourself comfortable with respect to the lending transaction. Again, I'm not in that role. I don't know all the analysis that a creditor would enter into in review. But I mean, you're spot on. You're going to have to do an evaluation as to, okay, what assets, what are we taking, what's our risk here with respect to this loan, and I'm not, again, this is more of a policy, not Safety Spec specific, but what's the risk if something doesn't go right and we're sitting in a bankruptcy proceeding, for example? What's my ability to recover that loan?
And the next JDA meeting will be June 6th. We're anticipating having another Growth Fund Committee meeting directly prior to that. We'd still like a recommendation or a vote to move forward tonight, but this could be discussed again at that next Growth Fund Committee meeting.
If we can, in fact, get a quorum of this group for June 6th and things go well, I mean, the idea of that special meeting was to deal with aerial robotics, but yes, Safety Spec, this loan was approved by the JDA last fall, so obviously we need a decision sooner rather than later. But yes, long answer to a short question, we could certainly have 2 items on a special June 6th agenda.
Very good. Is there an appetite to make a recommendation tonight, Mr.
One more question,
please.
Maybe for Ms. Richards, but again, so if we're being asked to give up potential security, and I didn't see it in the packet, but what was that? What did we estimate the value of that security would have been previously? I would imagine that it's not a capital intensive business at this point, but what did we estimate the value would have been of this collateral?
I don't know that we attempted to estimate it. The program description was just blanket UCC.
Blanket UCC, so.
Probably the easiest way to look at that would have been that we recently closed out a financing round at a 20 million valuation and raised money on top of that valuation. So we had multiple investors invest in the 20 million.
Tom, there's another issue for you to bring up. So at the time that you were looking at the loan, our patent was pending, it wasn't issued. It's a big difference between a valuation of an issued patent and a pending patent. Also, the other main assets you were looking at putting the UCC loan on or basically equipment, basically our MVPs are minimum viable products that we have been selling to the U.S. government and to universities throughout the U.S. and internationally. By putting a UCC loan on pieces of equipment, we can't sell it. Because basically, upon selling that equipment, it doesn't go back into the capital of the company, working capital, it gets swept by the loan. So just kind of putting something in perspective, it was a round peg in a square hole. But from an asset perspective, with an issued patent, you have greater bottom line assets than you had before. And Joe Vassick, you're an attorney, you could kind of describe that as well, I think.
Sorry, on mute. Was that responsive to your question? I don't know who asked, I'm sorry, or do you want further?
Yes, I think it did. We had our initial valuation would have been on prototypes, which turned into inventory, I believe. But again, if we did not value that, I guess that's my question would be is, if we did not value that, should we have, or would we in the future? I guess it's more of a policy question, I think, than anything. But I understand the rationale that patent pending versus patent now, there should be additional value there, so.
I don't want to rush a conversation, but we've got about 15 minutes, and I was looking forward to also the report, the progress report from First Eye. With Mr. Wolf, please.
I guess I'd be going off of what you said. I don't know if we're ready to make this decision right now. I mean, if we can carve out time on June 6th. I mean, I'm still just kind of curious. I mean, we approved this in the fall, right? That's when we signed the documents.
Nothing's been signed. That was when it was approved by JDA.
That was when it was approved. Okay. Yeah, and I just don't know. I mean, I guess I would ask Ken and Thomas, I mean, did you just not, at that time when we were discussing it, has something significantly changed and that's why this request is coming forward, or is that?
No, we raised all of the exact same issues with Mr. Gausted back in the fall, and we've had some follow-up on that.
Something did significantly change, the patent was issued.
Sure.
No, yeah,
right.
so the prospects, I think he was talking about the process, which is,
Why
didn't we execute the documentation? It's the same issues were discussed at the time we saw the first draft.
Ms. Whitney.
Mr. Holt, I think your question is, why has it taken so long to bring these questions forward, given that it was approved back in October and it's now May? Is that more of your question?
That's I guess, what I'm wondering.
And that's what I'd like to try to address that. One is we've been busy closing the rest of the round, which has been, it's a full-time job raising money on our side, Tom and I's side. But also, we were looking at when we proposed certain creative ways of maybe having rolling inventory, but it didn't really make procedural sense, if that makes sense. And when the patent was issued, when we came up with the idea of actually going back and saying, hey, we have a hard asset now that you could attach, that was the material change.
And with tech startups, there's always risk, but it would appear that there's less risk now. You've made significant progress over the last 6 months. So.
Yes, we have.
I don't know if we have enough information, considering this is literally, this is more of a process question. So I'm not sure I'm comfortable at this point, given that this is a true process question. I think we need more information, not that I want to hold up safety spec, but given that this was approved in October and it's now May, I don't think a couple more weeks is going to make that much of a difference.
In fact, it isn't just a couple more weeks because JDA wouldn't be making their decision until June 6th anyway. So that's the soonest that they would have.
Yeah, so it doesn't really delay the process. Because
we're not delaying the process. Okay. As long as we do have a quorum on June 6th is probably the main issue there. With that, I'm kind of getting a sense that there's a will to just table that for the time being. Are there any further questions? I think that we got some great information both from Mr. Gaustad and Mr. Barton and Mr. Burke, confirming what Mr. Gaustad informed us of. But we're going through our own process right now of how to address these kinds of agreements. And so it has probably more to do with our own process than the specifics of your request. Mr. Phelan, please.
Just because they may not know our process, I would let the folks at Safety Spec, your motion would be to postpone to June 6th Growth Fund meeting, and then if there was a positive recommendation or negative, I guess it would go directly to the Jobs Development Authority later that evening. So presumably you'd end up with a 4 o'clock meeting on June 6th. Hopefully we can get a quorum. You'd postpone further discussion and decision on that, and then that recommendation would go later to the 5:30 Jobs Development Authority meeting at June 6th. So like you said, we're on the same time path, and in the meantime, we can answer any of the further questions as part of it.
That's exactly what I meant to say. Thank you, Mr. Phelan. Yeah.
We're available to answer anything you need. The June 6th still works for us because we're not going to launch the next round until mid-month, Tom.
Right.
But timing-wise, we will not be able to do it much further along after that. Because we raise money at different dollar amount.
Sure. We'll be targeting having an answer for you on June 6th. Yep.
Fantastic. Anything you need from us, we appreciate your time, and we appreciate your consideration of the alternatives that we try to bring up, and we really appreciate, again, all of your time and your support
as well, in general.
Excellent. You're very welcome, and thanks for your interest in doing business in our community, and thanks for your patience on our process here. And we'll see you on June. Well, assuming, do we have a motion to do that? What Mr. Phelan suggested?
I will make that motion to table until June 6th.
Motion for Mr. Holt.
I'll second.
Second for Mr. Wolf. Further questions or comments? Hearing none, all in favor signify by saying aye.
Aye.
Opposed, same sign. So we'll see you back in June 6th. And in the remaining time we have, Mr. Gaster, thanks for your patience, and we look forward to, if you'd go ahead, and is there any staff report, or can Mr. Gaster just begin with his progress report?
Let him speak.
There we go. Mr. Gaster, please, take it away. Oh, you're on mute still.
We should sign off, I'm assuming, no?
You're welcome to stick around, but there's no need for you either, yes.
Okay, thank you.
Thank you, Mr. Barton. Bye-bye.
Thank you.
Oh, we still have you on mute, Mr. Gaster.
The Zoom curse.
Yes. Good to see you, sir. Welcome.
Well, it's nice to see everybody again. I'm wondering if you can see my screen, if I will share it, and I can bring you up to speed, or not. I can talk to it anyway.
I'm not seeing it yet. There, I think it's coming up. Yes, we can see it now. Thanks.
Okay, perfect. So, you will remember, I'm hoping, that what we're about is a tethered drone system that will be deployed on top of buildings and rolled out as a public safety type device. So, I wanted to give you a quick update by way of a little bit of video that we've been testing now, our final design. And as you can see, over the winter we tested in California. We have a nice tethered system. We have all the specifications done. It is not our intention, and never has been our intention, to manufacture ourselves on the drone side of things. And what we are concerned with doing is bringing all of the software technology into First Eye, and then having an assembly and a delivery process for First Eye. So here we have a nice tethered drone that is able to stay up indefinitely. We have all the specifications that we're now able to talk to manufacturers about. We have had some early discussions with North Dakota Micro concerning potentially assembly and delivery. We're not quite there yet. We focused very much on, first of all, integrating the software so that it appears in our Mission Keeper, in fact in KSI's Mission Keeper, our sister company, you'll know, in their software, so that we really have some product differentiation. So this is just a live stream that was coming in from that drone that you were looking at, and it's coming into the collaborative environment. So we've meshed the hardware, the software of the drone itself, and the collaboration and security and user management and all the things that make this really unique. That is all now meshed together and being tested for latency and streamlining. So I wanted to bring you up to speed with where we thought we were going to be and where we are. As with every startup, we've had a few challenges, but we've got some really interesting opportunities. We were planning to really identify our pilot customers by first quarter. We've actually identified a major pilot customer, and that's kind of good and bad. It's thrown us a little bit in as much as we're absolutely focused on this one opportunity. The opportunity is with Verizon, and it's with, on their behalf, with a major government agency. So this government agency, who I cannot name because we're under an NDA, has about 170 campuses around the country. And we, together with KSI and First Eye, have been hired to do a series of prototypes for all things drone. And obviously a major piece of that is the tethered system on top of buildings to support public safety for campuses. So we are focused entirely there because the idea is as this POC gets completed over the next 6 to 9 months, Verizon is looking to potentially productize this, take it out to the other 170 locations, but also take it out to the market as a whole. And if that works the way we think it's going to work, then suddenly an awful lot of the load with regard to reseller, with regard to sales teams, with regard to marketing comes off of us. So our risk goes way, way, way down. So some of these items have now moved to the right. We're not starting, sorry about that. We're not starting field trials in North Dakota, in Grand Forks, until probably third quarter, after it's been tested at this government entity. We have completed a whole bunch of software. We've held off on our hiring. We still have our one hire in North Dakota. We haven't hired any further for First Eye yet, because we're waiting to see how that rollout will actually roll out. What we're hoping to do is have, as I said, manufacturing of the drone somewhere. I don't necessarily believe it'll be in Grand Forks because I'm not sure there's, in honesty, there's capability. Maybe in North Dakota, but if not, manufacture elsewhere and then delivery to a distribution, testing, customer support entity. I'm hoping to be in Grand Forks. It could be that we partner with North Dakota Micro to do that piece, but it's still slightly early days. We have been out looking for funding. As you'll remember, our plan was to get to prototype stage and then go out and do quite a big round. We've changed that slightly because we believe the valuation, once we start deploying with Verizon and once we start seeing revenue, because these are paid POCs, once we start seeing revenue, our valuation will change significantly. So we are still going out for a very small round over the next month, more to fix Verizon's extremely long payment processes than anything else, and also to take care of the fact that we were really looking at this in November and December of last year when the whole project was committed, but it didn't get papered until the end of March. So there's a bit of a funding gap. We're totally used to it, and we're out looking at talking to a whole bunch of investors to do a small convertible round maybe $500,000, which is really more of just a cash flow bridge than anything else. So we're really excited. We've got a customer lined up that is going to be a massive customer, assuming we execute. So our focus really is on execution and then accelerate from there. So that's kind of a snapshot in, I guess, 7 minutes. So
Very good.
So very, very happy to take questions and stop sharing where we are.
Thank you, John. Thanks for the compressed time frame there. We do need to clear the room here in a few minutes. Any questions from committee members? Good luck with your continued progress there, and appreciate you coming in to give us this update at this time.
Pleasure. Good to see everybody.
Thank you, sir.
Thank you.
Very quickly before we adjourn, I just wanted to take a quick moment. The community is so lucky to have all of you serving on this committee. A wealth of expertise and talent was demonstrated over the last couple hours in this room. Thanks for your service to our community. And with that, looking for a motion to adjourn.
So moved.
Have a motion and a second. All in favor signify by saying aye.
Aye.
We still finish by 5:30. Thanks.